Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in company reports, and today we've got Agnico Eagle Mines Limited serving up some very interesting news that might just make your jaw drop. So, buckle up because we're about to deep dive into their latest filings to see if this mining giant is truly striking gold, or if they're facing a potential slump. If you love getting these unfiltered insights, smash that subscribe button and be sure to join our Discord community. It is linked in the description below. What we're looking at here is a report that tells us about some big happenings for Agnico Eagle. Think new financial statements, big announcements, and a peek into their future plans. It is essentially a snapshot of where they stand right now, and more importantly, where they're heading. Alright, let's get straight to the juicy stuff, the company's results for the end of 2025. This is where the real story lies, showing us their performance over the last year and specifically the last quarter. Now, let's talk about the numbers themselves. The financial statements are the backbone of any company's report, and Agnico Eagle's are no exception. We're going to focus on a few key figures that tell us the most about their health. When we look at their mining properties, it is important to see how their value is being maintained or grown. This is their core business, so understanding these assets is crucial. This figure represents the value of their mining properties on their books. It is what they believe these massive assets are worth. We want to see growth here, indicating they're either acquiring new valuable properties or developing existing ones effectively. A stagnant or declining number could signal trouble. On the other side of the coin, we have accumulated depreciation. This accounts for the wear and tear on their assets and any value they've lost over time. It is natural for this number to increase, but we want to ensure it is not growing disproportionately to the gross carrying amount, which could indicate problems with asset value. Mine development costs are a critical indicator of future production. This is money they are spending to open up new areas or advance existing ones. A healthy increase here signals confidence in future output and a proactive approach to expanding their operations. It is an investment in tomorrow's profits. Beyond just the land, we have their overall mining assets. This includes everything related to their mining operations. Growth here, similar to properties, is a positive sign that the business is expanding and investing in its future. Construction in progress is like a peek into their future. This is money spent on projects that aren't yet producing. A significant amount here means they have big projects underway that could drive future revenue and profit. It shows they are building for the long term. Let's dive into the carrying amounts more broadly. These are the book values of their assets. A rising trend here, especially when compared to revenue, shows they are likely growing their asset base to support future operations. Now, companies like Agnico Eagle often break down their performance by different operational segments or mines. This helps us see which parts of the business are doing well and which might be lagging. For example, the LA India mine subsegment, we want to see how this specific operation is contributing to the overall picture. Are its revenues growing? Are its costs under control? Every segment tells a piece of the story. And then there is the Canadian Malartic complex. This is a key part of their operations, so its performance is vital for the company's success. Well, be looking for strong financial health reported here. Sometimes companies have unallocated amounts, which can be things like corporate overhead or investments that don't fit neatly into a specific mine segment. It is good to see these are managed efficiently. The Macassa Cash Generating Unit is a specific reporting segment for them. Tracking its performance tells us a lot about how that particular part of their business is doing financially. Debt is always a crucial factor. Agnico Eagle's long-term debt is a key figure to watch. We want to see if their debt levels are manageable and if they are able to service it effectively with their profits. High debt can be a significant risk. Derivatives are financial contracts used to manage various risks. Seeing how they are used and their impact on the financials can tell us a lot about their risk management strategy. These are often used for hedging against fluctuations in commodity prices or interest rates. Fair value hierarchy is a way of classifying the inputs used to measure the fair value of assets and liabilities. Level 2 inputs are observable market data. It shows they are using reliable data to value their financial instruments. This indicates that these fair value measurements are done on an ongoing basis. It's important to see that they are regularly assessing the value of these instruments, especially for things like derivatives. Share warrants, especially those that are measured at fair value through profit or loss, can be quite volatile. It's important to understand how these impact their reported earnings. This refers to stocks they actively trade. The performance of these investments can add or subtract from their overall earnings, so it is good to track how these are doing. Level 1 inputs are quoted prices in active markets. This is the most reliable measure of fair value. Seeing a significant portion of their assets measured at level 1 suggests a strong presence in liquid markets. Agnico Eagle has investments in other companies, like Rupert Resources Limited tracking these investments, and their performance is part of understanding the company's broader portfolio and strategy. Similarly, their investment in Foreign Mining Corporation is another piece of the puzzle. These investments can contribute to diversification and potential future growth. And then there is Collective Mining Limited. Analyzing these external investments gives us a better picture of Agnico Eagle's strategic vision beyond their own mining operations. Restricted stock units, or RCS, are a common form of executive compensation. How these are valued and accounted for can impact earnings per share. This section deals with things that could become shares like options or warrants. It is important for understanding potential dilution of existing shareholders. Employee stock options are another key component of compensation. Their valuation and how they affect the company's financials are worth noting. This details the range of prices at which employees can buy their stock. It gives us an idea of how the stock options are valued and what the company expects its stock price to do. Contingent liabilities are potential obligations that may or may not occur. Guarantees are a type of this. It means they might have to pay out money if certain conditions aren't met by a third party. Share premium represents the amount paid by investors over the nominal value of shares. It is a key part of their equity structure. Retained earnings are profits the company has kept over time to reinvest in the business. Growing retained earnings is a sign of consistent profitability. This reserve tracks the cost of share-based compensation. It is an important accounting entry that affects profitability. This accounts for unrealized gains or losses on investments in other companies' stocks. It shows how their investment portfolio is performing. Cash flow hedges are used to offset risks associated with future cash flows. This reserve tracks the effectiveness of these hedges. This is a catch-all for various other reserves that don't fit into specific categories. Issued capital represents the value of shares that have been sold to investors. It is a core component of the company's equity. Reclamation provisions are funds set aside to restore land after mining operations cease. It is an important environmental responsibility. This includes reclamation costs and other potential liabilities related to their environmental obligations. This signifies agreements for new lines of credit, which can provide financial flexibility. This indicates a specific type of loan with defined repayment terms, often used for significant investments. This likely refers to a specific series of debt notes issued by the company. Understanding the terms and maturity of these notes is important. Or Mining Inc. is another company Agnico Eagle has a relationship with, possibly through investment or partnership. Their interactions are worth watching. This signifies if they have any customers who represent more than 10% of their revenue. Having a few major customers can be a risk if those relationships sour. Credit risk is the risk that a borrower will default on their debt obligations. Monitoring this shows how they assess the risk of their customers and partners not paying. These are retirement plans that promise a specific benefit. Understanding these is important for looking at their long-term employee costs. Similar to supplemental plans, these are also retirement benefits, offering a baseline level of promised income. These are accounting differences that affect taxable income in different periods. They impact their deferred tax liabilities. Another potential investment or partnership. Tracking these external relationships provides a broader view of their strategic interests. And Atex Resources Inc. Analyzing these investments helps paint a picture of their diversification and growth strategy across the mining sector. Orla Mining Limited is another company that might be on their radar, either as an investment or a potential acquisition target. Now, let's put on our Warren Buffett hat and look at the big picture. Agnico Eagle's financial statements for 2025 reveal a company that is actively managing its vast mining assets. The gross carrying amounts for their mining properties and assets show a solid foundation, indicating continued investment in their core business. The significant construction in progress figure is particularly encouraging, signaling a commitment to future growth and production. However, it is not all just about the assets. We need to look at the liabilities, they're long. Term debt needs careful consideration. While debt is a normal part of business, especially for capital-intensive industries like mining, we need to ensure it is manageable relative to their earnings and cash flow. The reported figures on derivatives and their fair value measurements suggest a focus on risk management, which is prudent in the volatile commodities market. The breakdown by operating segments gives us insight into areas like the LA India mine and the Canadian Malartic complex. We'd want to see consistent performance and growth from these key areas. Agnico Eagle's investments in other companies like Rupert Resources, Foreign Mining, and Collective Mining show a strategic approach to diversification and potential future upside. It indicates they are not solely reliant on their current operations, but are looking for growth opportunities elsewhere. The equity structure, with figures like share premium, retained earnings, and issued capital, provides a clear picture of their financial strength and how they have funded their operations and growth. A healthy increase in retained earnings, for instance, would be a strong indicator of sustained profitability. Looking at the liabilities further, provisions for reclamation and other environmental responsibilities are essential. It shows responsible corporate citizenship, ensuring they are prepared for the long-term impact of their operations. When we consider the trends, we're looking for consistent growth in key performance indicators like revenue and profitability year over year. We also want to see that their debt levels are well managed and that they are generating enough cash flow to cover their expenses and investments. The company's strategy seems to be focused on not only optimizing its current mining operations, but also exploring new opportunities through strategic investments and development projects. One area to keep an eye on is how efficient they are at managing their operating costs, as well as how effectively they are mitigating risks through their hedging strategies and other financial instruments. The fair value hierarchy for their financial instruments indicates they are using market data, which is generally a good sign of sound valuation practices. Overall, Agnico Eagle seems to be navigating the complexities of the mining industry with a clear strategy. Their investment in future growth through construction and acquisitions, coupled with their attention to financial health and risk management, positions them as a significant player. However, like any company in this sector, commodity price fluctuations and operational challenges remain constant considerations. Alright, that is our breakdown of Agnico Eagle's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.